Man, how's it going? Been looking
Good,
forward
good.
to this.
hmm
Everything seems to be kicking off in the new year already. We had a big team meeting the other day with everyone talking about where we're at. Good fun.
hmm and also a welcome to all of our users who are tuning in now, or who will be listening to this recording later. Welcome to another year with Otto Blockchain. And of course, in this, the very first podcast of 2023, I bet a lot of users are really excited to hear about what we have in store for them in the first quarter of the year. So, Jeff, if you could share a little bit about that.
Yeah. So at the moment, we're just getting the UI finishing touches for the Catalyst launch. So that will mean that everyone will be able to log into their Otto account. So if you don't have an Otto account, go through the KYC process, get an Otto account. You will get some Otto tokens as a airdrop to your account. So everyone who creates an account will get some Otto tokens sent to that account on launch. People who staked plug in the pre-mine, those Otto tokens will be distributed upon the launch, and you'll be able to buy Catalyst at that time and start securing the chain and start the journey of decentralization. They're our trading system, so you'll be able to trade on the exchange to start with, but we won't be onboarding assets. So you won't be able to bring your ETH or your USDC or your Bitcoin or your ADA in until after the decentralization has completed. So that's till we've got enough Catalyst tokens on the chain to secure it. And that we think that will be at the end of the plug burn. So the plug burn will be a 28-day process, where you, at any time during that 28 days, you can stick your plug into the Otto blockchain and into the contract and burn the plug. And at the end, you'll receive a voucher to buy the Catalyst tokens. Well, it's a token, so you'll be able to exchange that token or that proxy token for Catalyst tokens at the end, and that allows a fair distribution or a fair price distribution, rather than first in first serve, which we're loving, and was a special request from the community to do that, so that everyone got a fair chance to onboard in a reasonable time frame. The work we're doing with Immersive is going full steam ahead, and also the work that we're doing with the third-party custodian provider. They've already launched their product, and we're working with them now to integrate the Otto blockchain into their system. We have some other really great partnership meetings and partnership work that we're doing at the moment, where we're working with different staking companies. So there are a number of staking companies that really build a portfolio for their customers of blockchains that they participate in staking or providing nodes for and stuff like that. And so they're interested in learning more from us right now about the Catalyst token and how it will work and how they will obtain it, and considering adding that to their portfolios for the different networks that they're staking. So those are all really good things, because the more businesses and the more crypto investors that actually participate in the chain, the more important it becomes, rather than just the technology being amazing. It's those people adopting it that really makes it work for everyone.
So sounds like we are in the final stages of launching the blockchain, and everything on the back end, the technology is complete, and so we're just putting those final touches in the UI and the design. And so, do you think it would be reasonable to expect people to be able to participate by the end of Q1?
Yes, yeah. Well, before then. So we would like to launch in February, and that's our goal, and that's what we're aiming towards. So I think, and I mean, it is ready, so it's already built, but we're just getting the user experience right, making sure that all the security is tested, getting the audits done on the contracts, etc., etc. Yeah.
Yep, and I'm sure everyone is looking forward to it. Very excited. And before, we've gone through the plug burn mechanism quite quickly, but since we're getting kind of closer to the date, do you mind kind of taking us from the user perspective, step by step, what, for example, if I had plug, what I would do to convert that into Catalyst?
If you had plug?
Yeah.
Okay, so the step by step was you would take your plug and you would go to your Otto account, where you would be able to transfer your ERC20 plug into on the page in the account, and you would then it would show you a plug balance in your Otto account. That Otto, there will be a page where you go and you can just basically lock that in, and you'll be able to see all the information about how many other plug tokens have been locked in, what percentage of the total proxy you will get, because your percentage of the proxy will be directly based on how many plug you put in, and it'll give you an indication of how many proxy tokens you'll get at the end. At the very end of the 28 days, we'll be able to provide an estimate or a confirmation more so of how many proxy tokens. So there'll be 1 million proxy tokens, and we'll be able to tell you how many proxy tokens it will take to buy a catalyst. And that'll be the and it's just a simple interface on the web page. You don't have to go into any contracts or do anything unusual, and it's all done straight right from your MetaMask wallet and your Polkadot wallet at the time.
And then after this, blockchain launch and Catalyst minting is complete, what's kind of the next steps for the team and the community?
Yeah, so the next step, so once we've got that on, then we will bring the custodian service in, which is where you'll be able to deposit any digital asset that you have on any blockchain. As long as it's integrated with Otto, you'll be able to deposit that and actually have that balance and interact with the special DEX in Otto, interact with the token sales engine for new projects, and interact with the other DeFi protocols that are there.
Sounds good.
Using your assets, yeah. I'm really looking forward to it. It's so important that we have an on-chain solution like this, rather than depending on, exchanges and off-chain systems.
And would you say that from the institutional side as well, there's also kind of a burning demand, a need for a solution like ours as well to list their products?
Well, at the moment, what happens is funds have to put their funds into exchanges, and because the exchange is supposed to keep up with the regulatory compliance, for example, KYC, AML, CFT, anti-money laundering, countering the financing of terrorism, those really important things are supposed to be done by the exchanges. So that's if an institution or a fund that is looking after other people's money is interacting, they can't interact on chain. So they're missing out on the real benefits of the blockchain, and they're just basically participating in the market rather than participating in the technology and in the future of it. And if you can't, the exchange is only good for trading stuff, and it doesn't actually use the blockchain. And unless you use the blockchain, you're not taking advantage of the technology in any way or supporting the future of that technology. So, it just makes much, much more sense to have the stuff on chain. And that's why we're, creating this specific blockchain for this purpose, so that, it's a good place for investors to be.
And with regards to the institutions, KYC and regulation, I think over time our community has upskilled quite well. If you ask anyone in our Discord, I'm sure that they'd be able to tell you the importance of KYC and why institutions can't really participate in Web3. But from a business perspective as well, I think it's also important to understand how big the market actually is for a product like Otto Blockchain. So what's your opinion on that?
So there are probably 95% of our target market have no exposure to digital assets. There are 5% of our target market, so these are small funds, family offices, etc., etc. 5% of them are using exchanges or just holding digital assets, but they can't participate with anything on chain because of the counterparty risk, or risk exposing their customers' money. But with last year the collapse of FTX and the collapse of all of the lending that was going on in a black hole behind our backs, and the collapse of all of that leverage and lending really ended up, those institutions, and many of them were on FTX, they ended up losing all of their funds. So they're looking for solutions that don't let that happen. Some funds that we talk to have, over $5 billion in AUM and digital assets held in wallets, and they don't interact with anything because they can't afford to risk it. And they can't afford search and seizure issues, like where if it's found that the exchange that they're dealing with has done something fraudulent, the authorities will come in and shut the whole exchange down, and you're not going to be able to get your money back for a very long time. So they're scared, they're worried about that. They're worried about participating in DeFi protocols only because of the counterparty risk. So they would love to participate in DeFi, but they can't guarantee that they're not mixing their funds with sanctioned individuals, because of the open anonymity.
So those funds are part of the 5% of our target market that already have some kind of digital assets. Right. And going back to that 95%, do you think those kind of institutions, do they need a little bit of persuading to move on to digital assets, or are they trying to, are they waiting for an opportunity to jump in?
Well, there is a steady growth of funds that do take a small exposure, but they're taking exposure on futures markets, and we see how the futures market leads into volatility in the actual market. I think that depending on the technologies and the opportunities for like the protocols that get launched on Otto, there may be quite a number of companies that actually find a fund or an investment like that they really want to get into, or an index or anything like that that they really want to do, and it may attract some of them. So we want that steady stream of those other 95%. We're looking at what we're doing, talking to us, and making a start on it, and putting a small part of their fund into something that they think is, like suits their investors. So I think that's massive growth potential, but I think it'll be a steady trickle rather than rather than 95% joining us all at once.
These things take time, and I'm not sure if we can handle all 95% joining at the same time.
Well,
yes.
Well, let's just say it's a blockchain, so it can handle, but it'd be it would be a lot of work from our side, to sort of keep up with that. But I think, I think it'll grow, and I think it'll grow fast. And I think that all the people that we've talked to about this, they're, mostly willing to get involved. And if it's good, they will continue to increase their, involvement as well. So that, that's the position they're in as well. So it's good, and everyone I talk to, we see it in the world. Like when we first started building Otto, we got a lot of opposition. We were saying, oh, that's not blockchain, that's not Web3, because, like KYC and AML, Web3 should be anonymous. But over the last, also they questioned custody and stuff like that. But over the last year or so, people have learnt the hard way that KYC, AML, CFT, responsible investing practices, self-regulation of the industry are things that we really need to be able to bring this technology into the future. And then the other side of things is with the black hole that exchanges become, you don't know what they've done with your assets. You can never link your account to the deposits you've made. You can't see what they're doing with your funds in the background. So there's this really black hole, and exchanges proved last year that they will exploit that, and they will lend other people your money, or lend themselves your money to bet against you. And with solutions like Otto, that can't happen, and that can't happen in DeFi, because the contract is the contract. But adding that extra layer of protection of the custody of the original assets, and also the vetting and auditing of any contract before it's actually published on the chain, actually just takes a lot of that risk, a lot of that sleeplessness away from what you're doing with your money.
Yeah, I think it's interesting that you mentioned the black hole of centralized exchanges. I read just the other day there was an analysis done on the supply on Bitcoin listed on all exchanges, and it ended up being somewhat 10 million over the maximum supply, or over the currently mined supply of Bitcoin. Yeah. So yeah, it's a weak
the same
of centralization.
Thing with USDC as well. So quite a lot of exchanges do things like, if you're a major customer and you put your coin on the exchange, so let's say I put my coin, I launch a blockchain or a product, and then I put my coin on the exchange, the exchange will give you 50% of the value of your coin in credit to make your coin trade higher. And that's called a market making incentive. And you can trade for free with no fees against all of the people who are trying to buy your coin. And that's a really common practice in on exchanges, and we don't do that because it's actually, we we think it's illegal and we think it's a bad practice. But that means a lot of the money in many coins, a lot of the liquidity on the exchange is actually money that doesn't exist. Because they've just created it out of thin air. So if you add up all the USDC on all the exchanges in the world, it far exceeds the amount of USDC that actually exist. And USDT and etc. So,
yeah, we're living in a dangerous world.
Well, if someone giving you money that they don't have, just because they can manipulate your balance in a server on the back end. That's not what blockchain's about. Blockchain's about transparency. If you can't see it on chain, it doesn't exist. That's the base of it. And that's why we're developing what we're developing now, because we think that this will provide the future blockchain answer to DeFi and give more utility and more adoption of actual blockchain and actual DeFi services, because it's an alternative to the exchanges.
And in the blockchain services that are KYC compliant, do we have any direct competitors out there that have kind of looked at they're developing a solution to the same problem?
Yeah. So there was a business launched last year where they do a KYC solution where they will KYC you and they'll allow you to trade once you're on their exchange, but it's not on chain. But
that's interesting. So it's not on chain, as in it's not verifiable.
It's not verifiable, but it's actually because the technology we're building is hard. It's no small feat to launch a blockchain that actually works and doesn't fold in on itself, because it's doing a lot of things to keep, from a cryptography perspective, from a ledger perspective, from a compute power perspective, from there's lots and lots of things that a blockchain is doing, and to do that well and to work hard at doing that and doing it balanced, it actually takes a lot of research and development and time and very skilled and not very plentiful. There's not a plentiful level of top end blockchain developers that are out there that can and we're lucky that we've been building for 5 years, and our team have and we've invested in that research and development and in that creativity to get there, because it's not easy to launch an actual blockchain. But the problem is clear. Self-regulation is really important. Investing, putting your money in a place you can trust but verify, and that's the rule. That's been our motto or our mantra in Web3 from the very beginning: trust but verify. And exchanges you can't verify.
Yeah, it sounds like we started building 5 years ago, and the climate has rapidly shifted, always changing every day, but those values still retain their importance from day one.
Yeah, well, no matter what technology does, we're still people. And we're still living our lives and raising our families. So, and
I guess my final question before we move on to questions from the community. So on the topic of this climate, how do you think the recent climate is affecting, or what kind of impact that has on Otto Blockchain? For example, recently centralized exchanges are requiring users to comply with KYC. There are big companies are, getting involved in Web3. So where does kind of Otto Blockchain fit in this?
Sorry, could you repeat the question?
Yep. So there's been a wave. So centralized exchanges, when I first signed up, I didn't have to do KYC. But now that's become a requirement. So is that in a way highlighting, the importance of KYC in Web3? Is that a positive impact on Otto Blockchain and what we stand for? Or is it somehow in competition?
Yeah, so it's actually like for any organization who's handling money over a certain amount, a certain dollar figure. In most countries, it's $5,000. But in some countries, it's as low as $600. You are required by law to have appropriate KYC AML verification for all of your customers. And not doing that and not complying that as an exchange now, it means you're actually likely to get shut down and everything seized. And we all see that more and more taking place, especially those exchanges that are not doing it and not keeping good records. They're being found to be helping criminals and money laundering. And, when they find that stuff, everyone on even the legit normal people on the exchange, they lose their assets too, because the government just seizes them, and those people aren't going to get their money back in a hurry. So like, I love the anonymity of blockchain, open blockchains, but I think that's great for utility, but I don't think it's great for investing. I don't think it's great for, like, it's great for commerce, buying things, but it's probably not great for offering financial services to people in a professional way. So I think that's, people are finding that, and people are aware of that now. Like, the governments aren't naive anymore. They have special task forces that are investigating and learning.
They have upskilled.
Yeah, and they are ready and able to go and shut something down.
But of course, our standpoint isn't that we have to be at odds. It's about finding a way to work together in the space.
Well, the thing is, what we're doing is not illegal. Blockchain is not illegal, but it follows the same laws that exist in everything. And that's what people have to remember, is if that's the law, then every business, blockchain included, needs to follow.
Well, cool. That's the end of my loaded questions.
Cool.
Do we have any questions from the community? Feel free to post a message on Discord or raise your hand on the Twitter Spaces. Just a reminder, everything is recorded, so you can also go back and listen to some answers. In the meantime, Jeff, do you want to share your favorite piece of blockchain crypto news that you've heard in the past couple of weeks? What has really caught your eye?
Actually, I'm actually following the Futureverse story really excitedly at the moment, and looking at because the chain's live, so looking at some of the test things that they're doing on the chain, because when a chain is new and not really released to public, you start seeing what the devs doing. Like, you can easily see what the devs are doing, and seeing some of the contracts that have been loaded up, and like a lot of blockchains out there are still trying to work on a really good smart contract and a way of doing smart contracts. And with, because the plug toolkit has a patented smart contract structure called Pact, looking at those contracts and looking at how they're working and seeing the bridging and stuff like that they're doing in the root network, it's amazing. I'm loving it. Good stuff, good technology, really fast. The testing being done on them, it's like just seamless. It's just like something that happens in the background. I'm loving that. And I think some people have been posting some stuff on online about like when they're interrogating the chain and stuff like that, and really enjoying seeing some of the outsiders like interrogate it and providing really positive feedback as well.
Yeah, more eyes are always welcome.
I'm looking forward to seeing the Ripple Ledger integration as well, because that's actually going to be like phenomenally important for like a gaming platform, like a metaverse platform like Root.
We have Ajim and Kiwiana who put their hand up. I'll put through Kiwiana first. Hey, friend.
Hey, guys.
Hey, how are you?
Spaces. I'm good. I love these spaces. I always learn so much. You actually answered all the questions I had on the Otto side previous to this, but I'm really keen to hear your view, Jeff, around stablecoin. So I wasn't aware of what you'd mentioned around how many more coins there are versus what they're backed by out and about. So when you are trading, if you don't mind me asking this, what would be your preferred stablecoin for people to be using?
I prefer USDC, but
okay.
So if I'm holding a stable coin for a long period of time, I prefer USDC. But I'm okay being in and out of USDT. I love DAI, but I love it from a technology perspective, but it's not very practical from a, no one accepts DAI, so it's not very practical. But to me, like, the utility of a token is really, and buying the token for that utility. I prefer coins above anything, above tokens, because coins are actually something that's part of the blockchain that it's working on.
Yeah.
And just makes much more sense to me. So I'd rather have $1,000 worth of Ether than 1,000 USDT, if you get what I mean, because it just makes more sense. But I know from a practical perspective, you don't want to take risk with your money, and as long as everyone keeps accepting USDT or USDC, and that could change tomorrow. So suddenly tomorrow, Circle could say, look, we are bankrupt and we can no longer support exchanging USDC for USD. Suddenly, all the value held in all USDC would disappear, and the blockchain would continue.
Yeah.
Right. So that
makes sense.
Yeah. So that's why I say, like, they're good for practical purposes for the utility they provide, but they're not actually part of the blockchain itself.
Yeah, no, that makes total sense. And that leads me to one question about the launch of Otto and Catalyst token.
Mm-hmm.
Just thinking about that, and I've spent a few years working offshore in investment banking, and just was interested to hear you speak around the initial target market being smaller funds and family investment houses.
Yep.
Do you see, like, in terms of engaging with the larger institutions, obviously that's something you'd want to edge into for a lot of the reasons you covered earlier, even though blockchain can expand, it would be...
the larger, so from investment banking, you, as a person who gets given your sheet at the beginning of the day for what you have to balance and what your targets are for the day, whichever sheet you get, you have to find somewhere where you're not a significant part of the liquidity. Otherwise, there's no margin for you to play. So Otto would have to grow to quite a significant size to be able to meet the needs, or have some really significant kind of futures or derivatives or indexes that are available on it, for it to be able to meet the need of the larger investors. That is a goal, and I think we will get there, but it needs to be like, how significant the liquidity has to be like
100%. And so for these smaller family groups and the smaller houses that you're talking to, how do you engage with them off the initial introduction to introduce them to this opportunity?
So we actually are working with partners. So and they are financial advisors. So they are bringing they're talking to the funds and the funds managers and educating them, and having the meetings and talk and trying to help them diversify. And as you know, have you done investment with family offices? Or you probably, for your own family's funds, you're not making changes every day. You're usually looking at quarterly reports, but an annual target, right? So it's a nicer pace of like understanding what you're buying into, understanding who's behind it, understanding what it does, and choosing it and going in with a small amount, and then looking and finding something else that and you're probably going to go into 4 or 5 different things with a percentage of the fund, and you're going to keep most of the fund in in cash equivalents. You're going to keep most of the fund in property. You're going to have indexes on the stock market, but if you could buy an index on the DeFi market, for example, that might be a really good opportunity for a high margin or growth type investment that you could put a portion of your fund in, and just making that an option for more and more funds and an easy way for them to click in. They know that they can do it. They know they're compliant with their country's laws and regulations because of the process that they're going through with us. They can just click and they can just add, and then if they're getting good results and if they're, seeing their customer satisfaction on it, they're going to increase and they're going to use it more and recommend it more strongly, and other people will pay attention as well.
Absolutely. Oh no, that's great, Jeff. I was curious about that route to market, and I actually have been a bit tardy registering for Otto. We've got to do that, so that's my job this afternoon.
Yeah, cool.
Thanks very much, guys.
Awesome.
Yep. Thanks for your question. I'll put through Adjum now.
Cool.
Hey, mate.
Welcome back.
I believe you are muted, my friend.
There we are. Sorry about that. I cut out for a second. Can you hear me?
No worries. Yeah, we can hear you now.
Super. So I was hoping to walk through a toy example for the Plug Catalyst exchange and just see, learn a little bit more about like rounding.
Okay.
So imagine I were to deposit 25,000 plug, which I think would have the equivalent purchasing power of 1,000 Otto. What happens if the clearing price ends up being 600 Otto per catalyst? There's then like that 400 kind of Otto gap between what I deposited and what I could purchase. And my understanding is that there isn't a concept of fractional catalyst. So I'm kind of curious to learn more about what happens with that overage.
Yep. So what will happen is that because you're getting a proxy token, the proxy token does have decimal points places, and the proxy token is there's going to be 1 million proxy tokens. So you can have up to 4 decimal places on your proxy token, which allows you, if you don't have enough left over to buy a whole Catalyst token, allows you to either buy from someone else, buy a proxy token from someone else to get enough, or to sell your excess proxy token to someone else so that they can have enough. And that will be tradable on the DEX. So it's kind of like, there's a little bit of trading to get 100% use out of what you do, but nothing goes to waste, and we're not rounding down, or you're not losing out.
Okay, great. And will there be like a TTL on that proxy token, or will that sort of exist forevermore?
Yeah, it'll exist forevermore. So basically, at the end of the fair distribution, what's going to happen is we're going to burn all the plug that's in there, and then we're going to issue the proxy token at exactly the amount of your percentage of the total pool, and then we're going to mint those Catalyst tokens and put them in a contract where you to claim from. So they'll be sitting in that contract forevermore until they're all claimed.
Okay, super. And then I guess my second question was around timing. So it sounds like you're aspiring for a February initial Otto Catalyst swap.
Yeah, I think we can. I think we're really, really close now. And it's just going to be about planning the messaging, planning the activities and call to action, and getting it out there and making sure the audits come back and stuff.
And is February also for when you aspire to start the 28-day fair allocation scheme, or that might lag a bit?
No, that will be. It's all being ready to do at one time. All being
fantastic. So then it sounds like by March sometime we may really be fully up and running.
Yeah. It's actually really exciting for me though that we're doing the fair distribution thing, because it's actually the first time people get to use our launch platform, because we're using the special launch platform, which you can find out information about. There's some education about that, isn't there, Jafar?
There is some information on our white paper, but we do have to develop some Medium articles as we move on.
Yeah. So it's a very cool thing, and I think that it will become a hub for people who want to launch DeFi services. Will launch them on Otto because of this. It's a really good way to get crowdsourcing from an engaged community. So I think that I'm pretty proud that we're going to use that platform as people's first experience for this fair distribution, so that everyone who participates in this actually gets used to buying a launch from someone. And in my heart, I know that there's a small club of people who get called for seed rounds of really cool products that are being launched, and that's because there's a lot of KYC and trust and information that has to be shared, and lawyers and stuff like that, for them to do an offer to you. But Otto Blockchain has done that already, so they know everyone on Otto can remain anonymous to them, but they know that they're compliant with the law of and able to offer. So it's kind of the next level of IEO. but it's not.
That sounds interesting. Yeah. And to what extent can this also extend to like accredited investor status in addition to just sort of real world identity?
Yeah. So we will add more complex legal compliance steps that you'll be able to add to your basic KYC, AML, CFT, and we will keep adding those as part of the development of the Otto account. So if you want to participate in something that requires a certain, qualified investor status or something like that, and we need you to provide that certificate, you'll be able to click choose to qualify for that, and then exchange the documents, and then your account would automatically be updated to be able to participate in those. So it's kind of
awesome.
Yeah, it's going to make launching projects much easier to decentralize, rather than just choosing the same small group of seed investors across every product.
No, that's really cool, and I very much look forward to using the chain around the corner. Thank you.
Thank you.
And with that, it looks like we've just gone a little bit over time. But no, thank you.
It felt like it went quick today.
Yes. Thanks a lot, Kiwian and Ajun, for your questions.
Thank you, guys.
Hard questions, especially for Jeff, to make him really think. Just gives us all a really nice dialogue to listen to as well. And yep, so this Twitter space will be recorded, so feel free to jump back on if you want to recap, and see you guys in 2 weeks. Thanks a lot, Jeff.
Awesome. Thank you. Appreciate it. Thanks, everyone.
Thanks very much for watching. If you enjoy this content, smash that like button, hit subscribe, and maybe consider watching one of my other videos. Bunnies up!